Hey everyone, welcome back to another stimulus update. Today we're talking all about President Trump expanding upon what he is doing as far as stimulus packages go. And then also, there are some states that are actually saying that if you refuse to come back to work, you may lose all unemployment benefits. So here we go. I'm Logan.
Hey, I'm Edin.
All right, Edin, let's go ahead and walk through this. So today, yesterday we talked all about how what President Trump wants to do is he is actually going to do payroll tax cuts, but instead of giving it to the employer, he's giving it to the employees. So can you just walk us through a real quick overview of what that means, and then we'll talk about how he's actually expanding upon this?
Absolutely. So if you look at your paycheck, what you'll see is how much you got paid and then how much went out for taxes. Now, on the employee side, there's 4 taxes that come out. One is going to be your federal tax, one is going to be your state tax if you live in a state that has income tax, and then the other 2 are Social Security and Medicare tax. So anytime you hear payroll taxes, it refers specifically to Social Security and Medicare. Some people call it FICA tax, some people call it payroll tax, but it's that portion, and the regular amount is 7.65% for those 2 combined that you pay as the employee, and then your company also pays that amount.
So what he's doing is potentially cutting out that 7.65 to give you a bit of relief as an employee. Now, what he's also doing to expand upon what he really wants is, it sounds like that deductible of meals and entertainment, which used to be a big thing that no longer is, may be at play again. So Edin, can you walk us through what that means? Because as a small business owner, I get it, but as a normal employee, I wouldn't even know that was a thing.
Yeah, and as a normal employee, you don't really get to see the flip side of it as to what drives some of the decisions that businesses make. So one of them is always tax deductions. What can I write off? To what extent? And before Trump became president, there was this bucket called meals and entertainment. So if you go out on a business meal, for example, I take you out to lunch, I can write off that meal and get a 50% deduction. So if we go and we spend $20 on lunch, I get a $10 deduction. Before Trump, if we also went to an entertainment type of event, so think about a ball game, think about golf, things of that nature, I could also write off the tickets or the green fees also at 50%. Trump, surprisingly, as part of his big tax package called the Tax Cuts and Jobs Act, actually eliminated entertainment completely. So since the 2018 tax year, so 2018, and we just finished the 2019 tax year, entertainment is no longer deductible. It's created a whole lot of confusions. It's also caused businesses to spend less at entertainment facilities. Meals is still 50% in most cases, but there's been some changes there as well. So what this is really driving towards is undoing some of those changes that were made a couple of years ago to go back to pre-18 laws on meals and entertainment. And the bigger question with that is why? Why did we pass this 2 years ago? Now we want to undo it. One of the obvious answers is one of the industries that's been the most affected right now is leisure, restaurants, entertainment. They're all basically shut down.
So I guess he's just trying to re-stimulate those that are being hit the hardest, and then hopefully it's a good little break for businesses, kind of boost the morale, bring people back to work. So instead of spending money on meals yourself, maybe the business can spend money. So it seems like it's more of a holistic approach to not only helping out the restaurants and the entertainment business industry, but also potentially helping out the small businesses that are willing to, put forth the resources towards that stuff for their employees.
Exactly. I mean, it's going to help all around because you're going to have the businesses being willing to go and spend money on meals, spend money on some entertainment, and it's then going back towards, supporting your local economy and your other small businesses around you.
So it's not as much as like a $2,000 check every month, but it's still something that will be hopefully, re-energizing the local communities. So I know one of the other things that he's talking about is potentially a capital gains tax cut. So what qualifies as capital gains?
Yeah, so this is one that's always been very complicated and very confusing. Capital gains are tax or gains on assets. So think about stocks, investment real estate, sometimes your primary residence. So anything that has...
Like if you sell your home, does that count?
It gets complicated, right?
Okay.
So it depends on how long you've lived in the house. Have you ever turned it into a rental? Now we have things like Airbnb where you're just sub-renting one room.
Right.
So depending on how you've documented all of that and reported on your taxes, there's a couple different portions that go into it. But at the basic level, let's say you buy Apple stock, you pay $100 for a share, Apple goes to 120 and you sell it. You just had a capital gain of $20 in your Apple stock. Normally, depending on your income and a couple other factors, you may pay anywhere from 0 all the way up to 23.8%. And so what this is doing is saying, okay, we want to incentivize investing, and not just in stocks, but also in businesses. Because even on the small business side, again, it gets more complicated depending on how a small business is organized. You can invest in it, but you can also invest in your own business in terms of equipment. You can invest in vehicles. You can invest in buildings. And so one of the considerations is always, well, what's going to happen if I need to sell this item? Do I have to pay tax on it? And so if we cut out capital gains tax, now we have more free cash flow and really one less burden to think about to then go and say, okay, well, I want to sell my 5-year-old car and buy a new one, or a truck, or a van, whatever.
So what they're really trying to do here, it sounds like, is they are trying to almost like let the money just flow and don't worry about what's going on, if it's a smart tax move, if it's not, because if we cut everything out, would let capitalism take over, and that's that.
And that's a great idea. I mean, I don't know why they don't just get rid of taxes, period, for a couple of years.
So, speaking of helping out small local businesses and stuff, there is something that's going around where certain states, like I know Ohio is saying that if your employer asks you to come back to work and you refuse, then the employer is supposed to let the state know, because the employee who refuses to come back to work could actually lose all of their unemployment benefits. So, Edin, I know we were talking before this. I guess this has been around, but maybe not, maybe a little bit different than how it was since all this started.
Yeah, so traditionally when you apply for unemployment, and let's say you get approved on the front end, every week you have to submit a claim for your unemployment. So it's a weekly thing. And during that weekly submission, you go through a number of questions. And one of those questions is, have you turned down any job offers or a variation thereof? And so what they're really trying to say is, okay, well, did somebody offer you a job? Did you turn it down? And if you say, yes, I turned down a job, it typically sparks an inquiry. Why did you turn it down? Was it a bad fit? Was it not, a good fit for both sides? Was it the wrong schedule? Money obviously matters too. If you turn down too many jobs, and again, this is state by state. In some states, if you turn down one job, they immediately cut you off. In other places, they kind of give you a second chance. So now what this is doing is, as it relates to all these other stimuluses. So if we've talked about PPP. If you're a restaurant and you got a PPP loan, and you're now trying to rehire people, those people don't want to come back. They're making $600, $700, $800, $900 a week sitting at home, collecting unemployment. You're not going to go back and work at a restaurant making $2.13 an hour, plus hoping to make some tips. You'll never make that much money. So what this is doing is it's effectively shifting the burden from the state in terms of policing who's been offered a job to come back, who could go back and get off of unemployment, and who is actually doing it, and who's saying, well, I'm going to refuse. Logan, I don't want to come back and work at your restaurant.
Right.
But then on my application, when I go through on my weekly, I'm going to click, no, I didn't refuse. I didn't get a job offer anywhere. So the states don't have the resources to police that, and they're saying, well, Logan, you're the business owner here. You need people to come back. You tell us who's refused to come back, and then we'll go and cut them off and force them to come back.
Because I know that this all the unemployment, like the $600 a week, that goes away July 31, and we still got some time. I mean, we got a good amount of time for that, but this is something that we've been kind of talking about, where if somebody says, I don't want to come back, well, we don't know what's going to happen between now and July 31st. Like it could just totally stop on August 1st. All this $600 a week is out. It could also extend, or on the flip side, there could be, at that point, your employer could be good. They could have found everybody that they needed. So now you're sitting there and you got no job, and you go back to regular unemployment, and that's not really much to live at all. So there's a lot of different things where, yes, I guess as small business owners, for both you and me, this is a tax that we pay, is unemployment. So if you have somebody on unemployment, it's not like it's just free money from the government. It comes out of somebody's pocket, and small businesses pay it.
Exactly. And so there's a lot of that idea of how do we get people back into a normal rhythm. And of course, there's conflicting priorities here, right? So one side wants one thing, the other side wants something else. And where do we draw the lines? Where do we have the balance? And how do we get back into reintegrating everybody to a normal life? And there's no perfect answer for it. But I think that this is just one of those attempts by the states. And the states have been against this $600 a week since day one. Because they knew what was going to happen. People are going to get hooked. People are going to try to stay as long as possible. So this is just a way for them to say, okay, you know what? We're going to ask the business community to work with us on this and help us police this program.
Now, I do know that if you are yourself high risk, or you live with somebody who's high risk, or the business asks you to come back for something that is completely different than what you did before, those are exceptions to the rule. But again, that's all done on a case-by-case basis. So they would need to kind of figure out who, are you actually at high risk enough, which then gets kind of sticky. But either way, the government's trying to work with the state government's trying to work with the actual employers to see who is able to come back to work but is refusing, because then that messes a lot of things up. So kind of recapping everything, we got President Trump really pushing for the payroll tax cuts, but then also the meals and entertainment deductibles, that could be a thing again. And then capital gains taxes, those could be going away or severely limited or cut. So a lot of things at play there. Then on the flip side, the idea that if you are asked to come back to work and you refuse, you may lose out on that unemployment, which, even if you get past it, it may work out in the very near term. But looking down the road, we don't know what's going to happen with everything. And, it has to come out of somebody's pocket. It's coming out of small businesses, and it really could mess everything up. So, Edin, any kind of final words on this?
I think you did a great job summarizing everything. It's obviously very complicated. It's very political. I just got to stay involved any way you can as somebody who's affected, and try to make sure that you are taking advantage of any stimulus that's available to you, as well as being on the lookout for anything else that's coming down and how it might affect you, so that you're aware. Because what could happen with these unemployment changes is some of those questions that you get on your weekly filings could also change and affect you one way or another.
Yeah, so all right, everyone, thank you very much. As always, if you want to make sure that you stay up to date on all of this, hit the subscribe button so you miss out on no updates, because we continue to come at you at least once a day with the latest and breaking with everything. Thank you very much, and we'll see you tomorrow.